Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden meanings behind corporate filings. And let me tell you, this latest report is a real page-turner, a financial saga that is more thrilling than a blockbuster movie. Get ready for some eye-opening insights into the world of American funds, US Government Money Market Fund. And hey, if you love getting these kind of clear, no-nonsense breakdowns, why not smash that subscribe button and join our Discord community linked in the description below. So, we are diving headfirst into the annual shareholder report for the American Fund's US Government Money Market Fund for the year ended the 30th of September 2025. This is not just a bunch of numbers, it's a story about how your money has been performing and what the fund has been up to. This is a significant document for anyone invested in or considering this fund. It lays out the performance, the costs, and the underlying strategy that drives these results. Think of it as the fund's report card, a detailed look at its academic year. Now let's talk about costs because, well, who doesn't want to know where their money is going, right? For Class A shares on a hypothetical $10,000 investment, you would have seen costs around $51, which is about 0.5% of that investment. For Class C shares, that figure was $62, also less than 1%. Class T shares were even more cost effective at $37, or just over 0.33%. These figures are important because even small percentages add up over time. The fund's class of shares gained 4.01% for the year ended the 30th of September 2025. Now, how does that stack up against the market? Well, the US stress T-bill auction AVE3 Monday, the benchmark index, gained 4.47%. So the fund slightly underperformed its benchmark. For Class C shares, the gain was 3.90%, and for Class T shares, it was a bit higher at 4.15%. It is interesting to note that even though the fund didn't quite match the benchmark, the performance was still solid in a challenging market. Remember, past performance is not a guarantee of future results, but it does give us a good look at how the fund navigates different economic conditions. The report points to a story of strong short-term bond returns, but with declining yields. Why, you ask? Well, it all comes down to the Federal Reserve. Expectations of interest rate cuts by the Fed led to those yields falling. The Fed actually made a few cuts in late 2024, then paused because inflation was still a concern. Finally, in September 2025, they cut again due to signs of economic weakness. This environment means that a US government money market fund like this one, which holds us Treasury's agency discount notes and repurchase agreements, saw its yields fall too. In simple terms, when interest rates go down, the income generated by these safe investments also goes down. Let's look at the average annual total returns for Class of shares. For 1 year, it was 4.01%, for 5 years, it was 2.73%, and for 10 years, it was 1.77%. Compare that to the benchmark US stress T-bill auction AVE3 Monday index, which delivered 4.47% for 1 year, 3.22% for 5 years, and 2.19% for 10 years. This shows a consistent pattern where the fund has delivered slightly lower returns than the index over these longer periods. This is not necessarily a bad thing, especially for a money market fund, where stability and capital preservation are key goals, often leading to slightly lower but more predictable returns. Now, for some big numbers, the fund's net assets at reported in the millions were a massive $35,312. That is a lot of money to manage. The total number of portfolio holdings was 149, which gives us an idea of the diversification within the fund, and the total advisory fees paid were $92 million. Let's break down where the money is actually invested. Short-term securities make up the bulk of the investments, with a significant portion in federal agency bills and notes at 41.98% and US Treasury bills at 37.80%. Repurchase agreements account for 12.75% and US Treasury bonds and notes add another 7.23%. There is also a small percentage for other assets less liabilities. This confirms the fund's focus on very safe, highly liquid government-backed or government-issued debt instruments. Now, for the real deep dive into the fund's holdings, it's like looking at a grocery list for the fund at the end of September 2025. We see federal agency bills and notes very specific names like Fannie Mae and Federal Home Loan Bank securities with specific maturity dates and interest rates. For example, a Fannie Mae security on the 6th of October 2025 with a yield of 3.734% and a principal amount of $75 million. Then there are US Treasury bills with specific dates and yields, like a US Treasury note on the 7th of October 2025 with a yield of 4.035% and a principal amount of $566,500,000. The repurchase agreements were substantial, a massive $4.5 billion with various counterparties like Bank of Montreal and BofA Securities. This detailed breakdown really shows the granular level of management involved. Looking at the statement of assets and liabilities as of the 30th of September 2025, we see the fund's financial snapshot. Investment securities at value were about $30.7 billion, and repurchase agreements added another $4.5 billion. Cash was around $10.9 million. On the liabilities side, payables for repurchases of fund shares were $77.5 million, and dividends were $979,000. This all sums up to net assets of over $35.3 billion. And for practically all the share classes, Class A, Class C, Class F -1 through F -3, and the 529, and able classes, the net asset value per S-share is a very stable $1. This is the hallmark of a money market fund aiming to maintain that stable value. Notice how the number of shares outstanding varies greatly between classes, indicating their popularity and investment size. Now, for the income statement for the year ended the 30th of September 2025, investment income was a substantial $1.545 billion primarily from interest. The expenses were also significant, totaling $182.6 million before waivers. This includes advisory services, distribution services, transfer agent services, and more. After some waivers, mostly for able plan services, the total expenses came down slightly. Ultimately, the fund's net investment income was $1.362 billion. Interestingly, the fund had a net realized loss on investments of $34,000 and a net unrealized depreciation on investments of $4,001,000. This resulted in a net realized and unrealized loss of $4,035,000. So while the fund generated income, it also saw a slight decrease in the value of its investments. When you consider the overall size of the fund, this is a very small fluctuation. The statements of changes in net assets show us the big picture of how investor money flowed in and out and how the fund performed. For the year ended the 30th of September 2025, net investment income was $1.358 billion. Distributions paid to shareholders were $1.362 billion. And the net capital share transactions, which means money coming in from new investments minus money going out from redemptions, resulted in a significant increase in net assets by $2.107 billion. This means more investors chose to put money into the fund than took it out. The notes to the financial statements are where you find the important details. We learned that the fund has a ton of share classes, 23 in total. These include retail classes, 529 college savings plan classes, and retirement plan classes. Each has different fee structures and sometimes conversion features. For example, Class C shares can convert to Class A shares after 8 years. The report explains how they value the fund's investments. They generally use evaluated prices from third-party vendors. For securities where prices aren't readily available, they use fair value determination based on specific guidelines. This process ensures that the fund's net asset value remains stable at $1 per S-share, as is typical for money market funds. Now let's talk about the risks. The filing highlights market conditions which can affect the prices and income generated by the fund's securities. It mentions interest rate risk, which is crucial for a fund holding debt instruments, and it doesn't shy away from mentioning that investors could lose money and that an investment in the fund is not a bank account. This is responsible disclosure, important for investors to understand. And of course, the report includes the auditor's opinion. PricewaterhouseCoopers LLP gave a clean opinion stating that the financial statements present fairly in all material respects. They've been the auditor for these investment companies since quite a long time ago in 1934. This adds a layer of credibility to the numbers presented. For our tax-savvy viewers, the report states that 100% of distributions are designated as Section 163J interest dividends, which is good for tax purposes. A large portion of the income is also identified as US government income that may be exempt from state taxation, which is a nice perk for investors. We see a note that the approval of the Investment Advisory and Service Agreement is not applicable for the current reporting period due to timing, probably meaning it was approved in a prior period. This is a standard formality in these reports. Finally, the report is signed off by Christine M. Nishiyama as Principal Executive Officer and Becky L. Park as Treasurer and Principal Financial Officer. These are the key figures ensuring everything is in order. So what is the overall story here? The American Funds Us Government Money Market Fund is a massive stable fund that aims to preserve capital and provide income. It holds very safe government-backed assets. While it didn't quite beat its benchmark index in the reporting year, the performance was solid given the market environment of falling interest rates. The fund's diversification across numerous share classes caters to different investor needs, and the reporting is transparent about cost risks and how assets are valued. The sheer scale of the fund and the consistent $1 net asset value per S-share across most classes speak to its stability and operational efficiency. The slight losses in investment value are minimal considering the fund's size and its conservative investment strategy. It is a fund designed for stability and liquidity for the average investor seeking safety above all else. Right, that was our deep dive into the American Fund's US Government Money Market Fund's annual report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.